Euro dollar. So the euro continues to respect a recent well-defined range between 110.60 above and 107.96 below. A break on either side is now required for clear directional insight, with a break back above 110.60 to open the door for a more significant correction up towards the 113 area, while a break back below 107.96 would suggest a lower top is in place at 110.60 ahead of a resumption of declines back towards the December base at 105.20, which guards against the more critical March multi-year low at 104.60 further down. Sterling dollar. So cable continues to adhere to a downtrend, with the market making a series of lower tops and lower lows since topping out in 2015 at 159.30. At this point, deeper setbacks are now favored towards a retest of the 2015 low at 145.66. At this point, also only back above that previous lower top at 152.40 would compromise the current downtrend, while any rally should be very well capped now into the 150 area. Dollar yen. So dollar yen remains pressure to the downside, with the market now considering a possibility of breaking below psychological barriers at 120 and towards next key medium-term support at 118.06. At this point, any rally should be very well capped, with only a break back above 123.76 to compromise the newly adopted bearish outlook for dollar yen. Euro Swiss. So Euro Swiss remains confined to a multi-day, multi-week, and multi-month consolidation, though the broader structure continues to favor a recovery out from those record lows that were seen back in January. At this point, a push back above 110.50 is eventually favored towards the 115 area further up, while only back below 107.15 would compromise this outlook. Aussie dollar. So Aussie continues to trade within a consolidation over the past several weeks, though the market is confined to a broader downtrend, and while it holds below 73.85, continues to favor deeper setbacks towards a retest of the multi-year low from August just ahead of 69. Dollar CAD. So dollar CAD has recently traded up to fresh 11-year highs at 140.01, which is just shy of the 2004 peak at 140.07. At this point, though, we're seeing a bit of a consolidation to allow and a correction to allow for these stretch studies, overbought studies to unwind from those high elevated readings, and we could still see deeper setbacks to continue this correction, although any setback should ultimately be very well supported by previous resistance in the 134 area, which should act as an ideal higher low ahead of a resumption of gains and fresh upside extension through 140 and towards the 145 area further up. Really only back below 134.57, that previous September peak, would delay the highly constructive outlook for dollar CAD. Kiwi dollar. So Kiwi continues to show just how well capped it can be ahead of 70, with some formidable resistance in the 69 area, which should act as a medium-term lower top ahead of a bearish resumption and decline back towards those August lows down towards the 60 area. At this point, only a close back above 69 would compromise the bearish outlook for Kiwi dollar. SPX 500. So the S&P 500 has seen a nice rally after breaking down below 2,000 in a recent trade, and the market has now recovered back towards 2,100. But this rally should be very well capped towards and ahead of 2,100, with only a break back above 2,117 to really compromise what has been the newly adopted bearish structure for this market, which is showing signs of the formation of a major top after putting in a record high at 2,137 back in May. Really, again, only back above 2,117 would compromise this outlook, with any rallies over the coming sessions to seen well capped below 2,100 on a daily close basis. But we would need to see a break back below 1993, that low from back on the 14th of December, to confirm and strengthen the bearish outlook, accelerating declines back towards next medium-term support at 1870. Gold. So gold continues to trade just off the recent multi-year low at 1046, but there are signs of the potential for the formation of a major base. This would be strengthened on a break back above 1100 and open the door for an acceleration of gains, taking the immediate pressure off the downside. But until we see a break above 1100, this consolidation could still be a bearish consolidation ahead of the next downside extension below 1046, which would expose that major psychological barrier at 1000 further down.